Hey everyone, welcome back to Corporate Decoder. Today RANGU just filed an 8K and I'm seeing a potential cash crunch signal. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company has taken on new debt and it might be a sign they need more funding before their big merger. So RNG Capital Acquisition Corp just put out a current report which is basically a heads up to investors about important company events. This one came out on the 20th of April 2026 and the key date is the 14th of April 2026. The main news here is about a new loan they've taken on. It's called a Promissory note and it's for up to $1.5 million. This loan is from RANGU Capital Holdings, which is connected to the company's main sponsor, RANGU Capital Acquisition Sponsor, LLC. The interesting part is that this money can be used as needed before a specific date, which they're calling the maturity date. This date is when the company plans to complete its initial business combination. Essentially, it's merger or acquisition. This loan is pretty unusual because it doesn't have any interest. That sounds good, right? But what it means is that the company is paying no extra cost for borrowing this money. The main amount, the principal, is due on that maturity date. Now here is where it gets really interesting. If the company completes its business combination, the lender, RANGU Capital Holdings, has a choice. They can decide to convert all or part of the loan amount into what are called working capital units. Each unit would be worth $10. They basically get to turn the loan into ownership of the company, and the price is set at $10 per unit. This is the same price as the units in their initial public offering or IPO. This loan is also unsecured, meaning there is no specific asset backing it up. This makes it a bit riskier for the lender, but they're getting compensated with the option to convert it into equity. It's basically a way for the sponsor to put more money into the company when it needs it, but with the potential to get equity in return if things go well. They're saying this loan was made under a rule that allows for private placements of securities without needing to register them publicly. This is typical for these kinds of transactions involving sponsors. All the details of this loan are filed as an exhibit, which is basically an attachment to this report. This new loan is important because it shows the company is preparing for its business combination. It is essentially a bridge loan, providing funds until that deal is done. The fact that it is from an affiliate of the sponsor and the option to convert it into units suggests the sponsor is committed to seeing this deal through. However, it also highlights that the company might need this cash to keep operating or fund expenses leading up to the merger. Given that this company, RANGU Capital Acquisition Corp, is a special purpose acquisition company or SPAC. This kind of financing from its sponsor is common. SPACs are formed with the sole purpose of raising capital through an IPO to acquire or merge with an existing private company. The sponsor often provides crucial financial backing during this period, but the question is, why the need for potentially another $1.5 million? SPACs typically have a deadline to complete a merger, and if they don't, the money raised from the IPO has to be returned to investors. This loan could be to cover operating expenses, deal-related costs, or simply to ensure they have enough cash runway to find and close a suitable merger target within their timeframe. Looking back at similar SPAC situations, when initial funding rounds are followed by additional debt or equity injections from sponsors, it can indicate that the SPAC is facing challenges in finding a target, or that the existing capital is being consumed faster than anticipated. For instance, some SPACs that have had difficulty securing mergers have eventually had to liquidate. Returning funds to shareholders. This $1.5 million note, while not huge in the grand scheme of things, is a tangible sign of ongoing capital needs. The conversion option means the sponsor is willing to take on more risk by accepting equity at a set price, which could be favorable for them if the SPAC's future value is high. But it also means potential dilution for existing shareholders if the conversion happens. The fact that the loan doesn't bear interest is a positive for the company's immediate cash flow, but the ultimate cost will be in the form of equity. So the story here is that RANGU Capital Acquisition Corp is shoring up its finances with a loan from its sponsor ahead of its business combination. It's a standard move for SPACs, but also a signal that capital is needed to keep the wheels turning. Investors will want to watch closely how this loan is used and what the company's acquisition progress looks like. The key will be whether they can successfully complete a merger, and whether that merger creates long-term value justifying this kind of financing. RANGU Capital Acquisition Corp by CP Fine Tim Rotolo name. Tim Rotolo title, Chief Executive Officer date, the 20th of April 2026. Now, looking at this filing more broadly, it is a disclosure about a financial obligation. This particular Form 8K is focused on Item 2.03, which deals with new debts or financial commitments. It's a crucial piece of information for anyone invested in or looking at RANGU Capital Acquisition Corp. because it directly impacts the company's financial structure and future potential. The company is essentially taking on a short-term interest-free loan from an insider, with the option for that insider to convert it into ownership. This is a common mechanism in the SPAC world, but it always warrants a closer look at the company's overall financial health and its ability to complete its intended merger. The risk here is always that the SPAC runs out of time or can't find a suitable target, leading to potential losses for investors if the funds aren't managed effectively. The research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.